We can tell you about mining group DRDGold producing and selling less gold in the 6 months ending December. The price they got for the gold was also a little lower, resulting in the drop in first half profits. Despite the drop, the gold miner rewarded shareholders with a dividend for a 15th consecutive year and also announced plans to expand into new metals.
Yeah, we've only scratched the surface in terms of available resource in South Africa. And if you look at our capex guidance for the year, 600 million, and if you look at that as a percentage of total market cap, then we're probably one of the companies that, if investing capital is an expression of confidence in your environment, we're probably one of the most confident in that regard. And I mean, what we've done, and we're not blind to the realities of doing business in South Africa, there are loads of challenges, and they get more, they don't get fewer. But I think we're honest about the challenges that we face, and we invest in them, or we deal with them, or we confront them. We don't hope for them to go away. We don't hope for a better day or wish for a better day. We try to manage the business towards the reality of our environment, and we've had to do that now for more than a decade, and it stood us in good stead. So we think that there's loads of potential in South Africa. That's why we're contemplating a phase 2 of our Far West gold operations. That's why this year we're going to be investing several hundred million rand in the solar plant and in battery storage, etc., etc. It's not because of a vision that we have for the next 2 years. It's a vision that we have for the next 20 years.
DRDGold CEO Neil Pretorius adds that not enough capital is being injected into gold mining. As a result, gold supply is going to feel the pressure.
I don't think enough capital is being invested in gold mine. Since we've been reporting all-in sustaining costs, everybody wants to be the lowest cost producer of something, and the gold mining industry is not different. So not enough capex has happened, not enough projects are being run. If you look at production growth, very few companies actually are showing an increase in production off the assets that they have under management. Production growth is off the back of merger and acquisition and corporate activity and that sort of thing. So yes, I think there's a decline of the existing asset base or the existing production base. And as a consequence, I think supply is going to come under pressure at some point or another. We live in a world where there's a lot of make-believe in terms of value. We've had to really stretch our imagination to see value in the stuff that we sell to one another. Something that exists in cyberspace is deemed to be valuable. Now, I just don't get it, and maybe it's because I've fallen behind, but I do believe that value is something that you should be able to carry in your pocket, not just imagine in your head because it's existing somewhere in cyberspace.